Going over some of the trades that I took on the 28th of November, Thursday, which was a bank holiday in the US. And I took 3 trades on euro dollar. I took a long at this low, just below this 60-minute sell side liquidity, before price tapped into that order block in that 60-minute time frame in discount. So quite an early trade, and took another trade as price started to move up, and then took another short as price started to move down. So I was just very uncertain on the direction. Going into the day, I was clear on my drawn liquidity, which was up here, but because of the way price started to move on the lower time frames, I started to question my analysis, and this was main reason was I wasn't trading that much on around that week, around that month, and not being sharp was one of the main reasons. And I also think I was quite early, although this order block held after my first entry, and I saw this bullish engulfing candle, which gave me a lot of confidence for price to continue higher. This was followed with some bearish engulfing candles, which was then kind of a negative bias, kind of cancelled out my bullish confluence after seeing price fail to push higher after this bullish engulfing candle. However, after seeing price come down and fail to continue lower after these 3 bearish candles and put in this bullish engulfing candle, I think was a very good confirmation that we might actually continue higher. That bullish engulfing candle was a good confluence to continue higher, and then after that is when I got the series of bullish candles. So in my analysis, I wanted to see, after this bullish candle, I wanted to see series of bullish candles, which I think because it's bank holiday, it's hard to get that, and that's why I entered the trade straight after this bullish engulfing candle. And then because I didn't get the bullish engulfing candles and it started to move in the opposite direction, I took a bearish trade here, and then after seeing this bullish engulfing candle, that was my entry. That's when I should have taken a long back up to that drawn liquidity. Clear bias going into the day high time frame, like we rejected a major sell side liquidity on the weekly and monthly time frame. We also had a monthly time frame fair value gap right there, which price tapped into, which is another great confluence because price is cleared, tapped into a fair value gap, slightly going to come into another lower time frame fair value gap. So on the daily time frame, we had a clear drawn liquidity right around this high, but like I said, I wanted to aim for previous day's high rather than that high, which was right at this drawn liquidity. Also had a daily time frame channel. Euro dollar channels go hand in hand, especially at key levels, and it played out quite perfectly. And then on 1 hour time frame, we came, it reached that drawn liquidity. This drawn liquidity gets tapped into next week, not this week, after price actually pushes lower, and then we eventually do come up and take out a sell side liquidity inside, which also happens to be at the weekly time from fair value gap, which is a lower time from fair value gap after rejecting a high time from fair value gap on the sell side. Bearish FVG, yep, we come up there, we reject it the next week. But I'm not interested in next week. I'm interested in what happened during the day for my trade. And yeah, I'm just explaining the reasons behind the trades and what happened after entry. And I exited it. I was too early. I entered as price took out this sell side liquidity on the 60-minute. Should have waited for price to take out this order block. Main reason was because of the fact that it's London session. Price comes down into that sell side liquidity during London session after a accumulation and also a fake market structure shift right here. We had essentially a price trapping in buyers, and to me that's a good sign. And then as price drops down to that level, I believe I entered after this engulfing candle, but that 60-minute order block is something I should have noticed and entered somewhere around here. Again, not very sharp last month or this month, because I've not really been focusing on trading as much, and because of that I'm doing this journal on almost 3 weeks after the trade, which is what I've done for a lot of the trades from last month. And yeah, I'm just reviewing before going to next year to stay sharp and understand most of the trades that I took. Like I said, good trade. We had a market structure shift right after entry. We honestly price just ranged up and down, and I took a short here, which I exited. Again, price as it came into somewhere into this sell side liquidity, I exited because I wasn't clear. Although I changed my bias to a bearish after seeing this price action on the 5-minute, I still wasn't convinced that it was bearish for the day. And because we also had quite a strong bullish engulfing candle the day before, after rejecting a sell side liquidity and pumping up, and leaving push closing above this bearish imbalance, I was quite bullish for the day. Sorry. On the 4-hour time frame, we eventually do get this bearish pin bar, and it's followed with the bullish run that I was looking for. I was just really early in the trade, and because it was bank holiday, price didn't move as I anticipated. It just started to consolidate first and then move up. Overall, okay analysis. Good, I'd say good analysis, just not good entries and not enough confidence to take these kind of trades. But this just gives me more confluences for future, especially when I'm predicting price to go up to a high and I get something like this. Although I could have entered here, if I wanted more confirmation, I'll wait for price doing a pullback and then give me another engulfing candle, and that was a really good sign that we might continue higher. Cool. Yeah, this is just going to be a really long video. The rest of it is me analyzing every single detail of every single one of these trades live, so it's a bit tedious, but to me it's a good lesson to just watch myself comment on every single detail of the trade, when I should have just taken the trade, left it, maybe even put stops below these lows and put my targets up there. That's still 2-1, right? We've got this sell side liquidity here that price could eventually come into. We've got the first fair value gap, and ideally price shouldn't really be dropping any lower than that. If it did, then I'm out. If not, then that drawn liquidity should be my target, and that would have still been 1.8. Good risk reward. So yeah, that's what it is. It's a good lesson learnt. So on to the next one.
I've gone long on euro dollar as of 8 o'clock this morning London time, because I'm predicting price to push up to these highs eventually, or yesterday's high at least, which is at 1.0591, especially because after rejecting price, this sell side liquidity on the weekly time frame and tapping into that monthly type of fair value gap, price has found some bullish momentum, and I'm predicting price to continue higher up. So essentially we had this bullish candle on the 240 time frame. So what we did yesterday was we pulled back into this range, deep into this range at this bearish fair value gap above this swing, and found some resistance. We came up into that level with this candle right here, this liquidity candle. We took our liquidity off the high first, and then we've come down and taken our liquidity below that candle was low, and we printed this candle, this bearish engulfing candle, after this bullish pin bar candle, this bearish engulfing candle, and we've taken out low off that candle again and tapped into this 60-minute order block. And to me, that's a good sign that price might find some support there. And the waves came down on the lower time frames, on the 5-minute time frame, is quite a good sign that it might hold. So I will be watching that. I'll place my targets. I'll watch how price reacts at New York Open. I'll move my stops to break even. Then I entered a bit late. I would have ideally liked to enter somewhere around this candle, but I've entered late, so it's what it is. I do understand the high time frame order flow is bearish on the weekly time frame, right? So I'm not exactly going to say we are going to go up, up to these highs, although I am watching those highs at 1.0609. I'm not predicting price to get up to that level, especially after the way price has been reacting of this bearish fair value gap. So yeah, I'll wait and see, but I do expect some kind of a reaction at this low right there at that 60-minute order block, that swing low. Even if it's a manipulation before price continues lower, I do anticipate some kind of a pullback. So I'll be watching and taking partials off as price moves up, if it moves up. And I have already exited that trade. I exited that trade as around here. It was a 0.3% loss because I didn't risk a whole percentage in this trade, mainly because I'm not too confident in the trade. And after entering, I saw this on the 15-minute. this bullish pin bar candle, and that to me was kind of a sign that price is going to come down and take out this low of that candle before it does find any kind of a support. And I didn't give myself enough breathing room, and I think I think price can come down and take out that low. So yeah, I just exited that trade before I could get stopped out. So essentially fear of losing right here. And I'm definitely have lost a plot at the moment because honestly I don't know how to trade right now. I've been so busy with everything else, and just so busy at the moment. I don't really have the confidence to trade certain trades, certain setups, and this is a setup. It's a continuation setup after a rejection of a sell side liquidity. It was a clear drawn liquidity. It's just the fact that we rejected this fair value gap below these equal lows that has me questioning whether my entry is right or wrong. And I exited that trade, and now it looks like it's going to go up and hit my targets. First of all, it might not even hit that target. I might still be wrong, right? That's still a prediction, but given the way price had approached that level, to me it was kind of evident that we were going to hold this level, especially with these two candles on the 1 hour time frame. This pin bar followed by this bearish engulfing candle that took out the highs and lows at a key level. This swing low order block is a very good sign that price could potentially hold, and this next candle could potentially be a bullish engulfing candle. I don't know what the candle after that will be, but I do expect price to come up and take out the high of this bearish engulfing candle and potentially go up to the Asian high, which is around here. So let's see how that plays out. So I'm not going to talk a lot about the first trade I took, which was here. Price moved up to that New York Open and rejected it with quite a strong momentum, and it looked like we were going to come down here, take out these lows. But since then, we've just started to displace higher on the 5 minute, and it's clearer on the 1 hour time frame, which is what I was expecting. Like I said earlier, after seeing this bearish engulfing candle, after this bullish pin bar, this black pin bar, I was expecting this to be a bullish engulfing candle, but it wasn't. However, I got my bullish engulfing candle eventually after this doji, this bearish engulfing candle that took out the highs of that candle, and this bullish engulfing candle. And to me, that's a very good sign now, because this is a bullish engulfing pattern, and I expect price to go up to these highs. So yeah, I did take a long after this bullish engulfing candle, and I really got to stop using the word I expect price to go up to this high. It's that I predict, not expect. It's actually quite tough to hold a trade when price doesn't do as I anticipate or as I predicted to do within the next hour. So like I was saying, I wanted to see a bullish candle after this bullish engulfing candle, and it wasn't. It was a doji candle, and that kind of ruined the fun for me. It's US Bank Holiday today as well, so it doesn't seem like we're gonna find a sudden push up during New York Open. Maybe we will, maybe we won't, but it just seems like we're in quite a consolidation at the moment, and honestly I don't really know whether it's going to go up or not. It could potentially do, or maybe we're going to come back down one more time before going up, so I'll be watching out for that. If the next hourly candle is a bearish candle, then honestly this is not a good sign, because order flow on the higher time frame is bearish from the weekly time frame. I know it's Thursday, so the bearish order flow kind of doesn't really, I don't really trade Thursdays trend trades, but we've already pulled back quite deep for the week on a bearish order flow, and this could just be a pullback before price comes back down, which is kind of annoying because clearly we've got a drawn liquidity right there, right? We've come up after rejecting this sell side liquidity, quite a major level. We displaced up. Honestly, the good location to enter would have been this swing low right here above that gap, which I missed, and then price making this second swing and reaching this fair value gap. And to me now it just looks like we're not going to continue higher up at the moment, especially when price didn't continue its bullish momentum after this bullish engulfing candle. And now if I start seeing bearish candles, then to me that just suggests we're going to continue lower. And we've rejected the New York Open, right? We've come back, we've tested it once, we've tested it twice, and we've come back up there the third time and rejected it with this bearish engulfing candle on the 15-minute time frame. Look at that nice bearish engulfing candle after price put in a bullish engulfing pin bar. inside bar pin bar and rejected the highs of that pin bar and the mother candle with this bearish engulfing candle, and that's kind of suggestive that we're rejecting that New York Open on the 15-minute. So more confluence is coming into this trade. That's making me think we are bearish at the moment. On the 5-minute, we came up to that New York Open, rejected it right twice, wicked above that liquidity, market structure shift, unicorn setup. We had a bearish fair value gap. Price came into a bearish fair value gap, rejected it, and it looks like it's pushing lower. Honestly, I don't see price going lower anymore. I mean higher anymore. So let's just see how it plays out, man. I'm in this trade. I'm overanalyzing, overthinking, and it's just slowly deteriorating my confidence in that trade, which I was very confident in when I entered the second time around. We've got 2 minutes till the close of this candle, and if this is a bearish engulfing candle, honestly, that is, to me, not a good sign that we're going to hold the bullish trade. And to me, I think that that's going to continue lower if this is a bearish engulfing candle, the way price is reacting at the New York Open. Okay, that was not a bearish engulfing candle, but we got a low wick candle, which is good. However, I need to see price push up now. If it pushes lower, then again, that just shows me that this candle, the wick below, is not a, it's just a fake wick below, and price is looking to push lower. And then we'll see series of bearish candle with small pullbacks along the way in the opposite direction. So we'll just wait and see. I just want to be able to hold this trade until I get stopped out. Really, stopped is below this low, which is fair enough for me. Price does come down to London Open or London low. Would I go for long? Not really. I've taken 2 trades today, and that's enough for me. I actually hate this. This is exactly what I didn't want to see. Series of bearish candles after this bullish engulfing candle, which to me suggests price is going to go lower. We also came up. I have drawn this trend line from down here. We've had 1 test, 2nd test, and we had a 3rd test where price bounced off with that bullish engulfing candle. And at the moment, it looks like it's not going to hold, right? So I'm going to see how price reacts at this level. We also came into this 60-minute potential order block. That would have been an order block had price closed above that. It didn't close above it. This high right there, the candle wicks high. And at the moment, honestly, I'm switching my bias from bullish to bearish at the moment because I don't expect price to continue higher up. And I will exit the trade as price pulls up into the discount of this range, and I'll go short. I've taken a short here. I haven't closed my other trade. I'm just hedging my position at the moment because I think price is going to go lower after looking at the high time frames, 15-minute, 1 hour. Honestly, I don't see price pushing up anymore. This 1 hour in bullish engulfing candle just seems like an order block in disguise. It might not be right, but at the moment, I'm long and short. If I'm long, if the long plays out, I expect price to go up here. If the short plays out, I expect price to come down to this low. And either way, it's this is 1.7 long, 1.2 short. So if I lose, it will be a 1% loss. If I win, it will be over 1% win. So hedging the position, that is the loser. Let's just see how it plays out now. I'm done over analyzing this trade. I've closed that trade after being in a little bit of a profit. Closed both of those. By both, I mean this long trade that I was in from here and this short trade that I was in from here, somewhere around here, almost 0.9 hour. Overall, honestly, it was around a 0.23 hour in profit, not 0.3 hour profit, because yeah, I don't want to be in these trades. It's just, it doesn't meet my rules. I got in them by FOMO, essentially. This had a drawn liquidity. I was expecting, or I was predicting price to come up to these highs, honestly, and this 1 hour candle, bullish engulfing candle, suggested it might go up to that high, and when it didn't, to me, it was just a case of I didn't expect price to continue higher, especially when the weekly time frame order flow is bearish, and we had, you know, yeah, and then we just come into this pullback of this range at 240 fair value gap, which is something I was watching yesterday. I didn't really trade that level, but this is a bearish fair value gap just below these equal highs, and price has just been rejecting that level, and I honestly don't know what price is going to do, and because of that, I didn't really want to be in this trade, and I would have been happy to get out at break even, but it's what it is. I hedged my position in the other direction after I noticed that we could potentially be bearish, and I made some profit. So I'm happy with that. And that's just a deep analysis of how painful it is to be in a trade when I don't really know the direction, and when I'm trading when I'm not too confident in my trades. So it's just for future reference to myself. Like, don't get in these low quality trades when I don't really understand them. The drawn liquidity identified was not exactly the best drawn liquidity. We have got this flag pattern coming up, and let's just ignore it. It's just wait for price to get to this drawn liquidity before I take a long, right? I tell myself I don't want to take a trade when we've already made a swing, unless we are in a major trend. And this is, we're in a major bearish trend at the moment. We've already made the initial swing after sell side liquidity was taken out. And if I had gotten into that trade, then yeah, fair, that's a good trade. But to me, this swing is too late. It could go up there, it could not. Either way, I wait for that to be taken out before looking for shorts, and I wait for this low to be taken out before longs, or at least this low. And that's just how it should be. Another thing I feel quite stupid about with this trade is the fact that whenever I say we've got something, a doji candle like this, especially when the higher time frame order flow, weekly time frame order flow is bearish, and we see a candle like this bullish doji candle, and then we fail to push above with this bearish, and then we put in this bearish engulfing candle, then another bearish engulfing candle. It's just a sign that price is failing to push higher, right? This just should have alerted me that it's not going to continue higher up. But we'll see. And then we get in a slow move down, and to me this location was a good location to go for a long, which I did at the start of London session. I just couldn't hold the trade, and then we got that bullish push up to the New York Open, which is fair. We saw a reaction as I was expecting, but it just wasn't a reaction that would have pushed price all the way up to these highs so far. And then now we're pulling lower. Where we're going to pull into, if we continue lower, then this is a bullish fair value gap that I will not be watching to go long on. I would be waiting for price to come down to these lows. Whenever I see trades like this, we've got a market structure shift. Honestly, with I believe this is a channel. We've got RSI diverging right from this to here, and then we've got market structure shift. Ideally, we should find some support and push up. And with this bearish pin bar, now, like I said, right, after seeing this candle and price failing to push higher, and then put in this bearish engulfing candle, if we fail to continue lower and put in bullish engulfing candle, honestly, will be a sign that we might continue higher up after this. So we'll just wait and see. Still got 4 hours. It's New York dollar bank holiday. It's just going to take forever to play out, so it's just better to be out of the charts for the day now rather than waiting around. I'll circle back to this tomorrow and see how market has played out.